Let me quickly talk to you about a no-income proof business loan. So I want to share with you the 5 hacks that get you a giant amount quickly and easily. Don't you go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome Soda Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak about no-income proof business loans, and I want to share with you the top 5 hacks that get you a massive amount quickly and easily. Of course, we're talking about loan amounts, okay? The very first hack is to check eligibility. So everybody talks about no income proof, no income proof. What does that mean? And what are the business loans requirements? It's important because you can't apply for a business loan without having a clear idea of the loan requirements. So most of those loans, they don't ask for income proof, but they do ask for other stuff. Okay, so you better be clear about those criteria, and you better make sure that you qualify. First, they might ask for a credit score minimum. In most cases, they will ask for 500. In some cases, it goes to 600. We have seen it all. We have seen lenders that ask for 500, 600, 650, and whatnot. So you want to be sure about the credit score. Second, the time in business. Lenders will want you to be in business for 6 months at least. So if you're a startup owner, you can qualify. But again, you want to double check because we have seen some lenders also who want you to be in business for 2 years. So it's all about having a clear idea of the time in business. In some cases, they might ask you for a business plan. Okay, I'll come back to the business plan aspect later on, but it's important to understand that when we talk about no income proof, that doesn't mean no paperwork. No income proof does not mean no doc loan, okay? So they might ask you for a business plan. They might also ask you for a balance sheet. So be prepared, okay? We're talking about no income proof, but we're not talking about no financial statements, okay? No income proof means that you cannot prove where you get the money from. You are running a legit business, but maybe your accounting is not really clear right now, or you are generating business, or maybe you don't have the right resources to actually have a proper income verification process in place. They might ask you for a balance sheet. They might ask you for cash flow history and projections. So when we talk about cash flow history, we are talking about, you can actually show your bank statements, okay? Or you can, if you have an Excel spreadsheets, if you're using everything, if you're inputting everything in a software tool like QuickBooks, Xero, Wave, and whatnot, you can actually show them the reports from that software system, okay? And they might also want to see your accounts receivable and accounts payable reports if you have them. The bottom line is that you need to understand the business loans requirements. Okay, when we talk about no income proof business loan, you need to understand what are the criteria that will get you qualified for the loan. And if you're interested in learning more about the subject, we have actually a show titled 5 Rare Business Loans Without Income Proof. So you might want to avail yourself of that show and learn more about the topic. You also need to understand what the lender is looking for on a loan application. Okay, so when we talk about eligibility, we're speaking about 2 things: understanding the business loans requirements yourself, but also seeing things from the lender's perspective. You know, you got to put yourself in their shoes, boss. You need to understand what they're looking for. So normally when the lender is looking at a business loan application with no income proof, they are paying attention to the history of the business. They want to make sure that the business is legally formed, and they want to know how long the business has been operating, when did the business start, and how has it grown, and how revenues are generated. They're not asking for income proof, but they want to understand your business model. Be ready to explain that, boss. Don't tell me you have no idea how you generate money. You know, Everybody knows, every business owner knows how the business generates money. So those are basic questions that might seem basic, but if you can't answer them, guess what? You will not be approved for that kind of loan. And they might want to ask, they might want to ask some questions about the management of the business. If you're a solopreneur, if you are a sole proprietorship, if you're a one-person business, that's fine. But if you have employees, they might want to ask you about how you actually manage the employees, okay? And this is important because the way you manage your employees tells the lender that you are a legit business, that you will not have any kind of lawsuits, any kind of problems with the states or federal in terms of compliance with HR rules, HR laws, okay? The lender will also pay attention to your market, because remember, lenders are scared about what? Risk, right? They're not scared, but they are thinking about managing risk. So if they're giving you money, they want to make sure that you will be able to repay them back. And everything starts from the sector, the economic sector you are operating from. If you're in a sector that's just growing like crazy, even if you can't prove your income, the lender might give you the loan because they know that this sector is making money like crazy, okay? And it's important to also be ready when it comes to projections. You want to explain to the lender your projections in terms of revenue, in terms of cash flows, and they also are interested in the purpose of the project. Why are you borrowing? Okay, what is the use of the business loan proceeds? So those are important. So lenders will really want to understand it, because their goal is to make sure that if they approve you for the loan, you are able to use the money, turn things around, and generate more money so you can repay them back. The second hack. So the first hack is to understand eligibility. The second hack is liquidity. This is important, boss. Anybody home? Anybody home? Okay. You got to be able to demonstrate sufficient cash flows, because everything happens in the statement of cash flows. If you're thinking no income proof means no statement of cash flow, you are just lying to yourself. You are going to have either to create a statement of cash flow yourself. You can do this in Excel, or you can do this in an accounting software, but you're going to have to show the lender that you are generating positive cash flows. Now, in other words, when you subtract your inflows of cash, your cash inflows from your cash outflows, you are positive, okay? And please don't confuse cash flow positive and profitability. Those are two different things. So profitability is so if I say your company is profitable, that means what? It means that your revenue exceeds your cost. But if I say your cash flow positive, it means that your cash inflows exceed your cash outflows. Now, you can be profitable, but always run out of cash because your customers maybe are not paying you on time, if ever. You have to spend time chasing them. And sometimes you might have a high cost in terms of collections, but you're profitable. You know, you're looking at the books. Oh, wait, I'm profitable. Okay. Where is the cash? Show me the cash. Whereas you can be cash flow positive also and not be profitable. In other words, you might actually generate cash from other sources. You might borrow. You might have access to cash in terms of your collateral and whatnot, but not actually generate enough cash generate enough revenue in the short term. The thing is that if you are profitable and you're able to manage your collection of accounts receivable, your cash position should be fine. So what I want to say here is that when we talk about no income proof, make sure that you can demonstrate sufficient cash flows. You're not demonstrating income proof. Okay, I know you are running a legit business, but I just can't prove how you make your income. Okay, but show me the money. Show me the money. Okay, I want to see what's really happening in your business in terms of cash inflows and cash outflows. And this can happen very easily by analyzing your business bank account or by looking at a history of your deposits. Okay, your deposit weekly or daily or monthly and whatnot. Hack number 3, statements. Oh, those are really important. Even if you cannot or don't want to prove income, you can still prepare pro forma financial statements. Okay? Now, I'm not trying to razzle dazzle you with fancy words here. Pro forma just means projected. That's what it is, okay? And when we talk about pro forma financial statements, we are speaking about 3 financial statements: income statements, balance sheets, and cash flow statements. Again, what I'm trying to say here is that even if you cannot prove your income, you can hire someone or do it yourself, but you just need to prepare projected financial statements so that your lender has an idea of the kind of business you run. Sooner or later, it's important to have those statements anyway, because come time to file your taxes, it's important to sort of show the IRS how much you have made during the year, or state tax authorities. Okay, so it's important to have this. And again, I want to emphasize that you don't have to have a PhD in accounting. If you have no idea what I'm talking about, maybe it's time. Not maybe, it's certainly time to hire someone. You can hire a local CPA, or you can hire a local bookkeeper or an accountant to sort of run through your books and generate those financial statements on a pro forma basis, projected basis. Okay, and it's really important, because those statements will allow lenders to see where your business is heading in terms of profitability, in terms of liquidity, okay, in terms of operational excellence. In other words, are you growing month by month? Are you growing month after month? Are you growing year after year? Are you growing quarter after quarter? What is your performance like? Okay, and if you don't want to hire people to create your pro forma financial statements, no problem. You can use accounting software such as QuickBooks, Xero, Wave, Expensify. They have a very user-friendly dashboards that allow you to create your own financial statements. Okay, and so beyond the numbers, so the true value of pro forma statements goes beyond the numbers they show. So these reports provide key stakeholders, lenders, investors, the foresight needed to make decisions and strategically plan. Okay, so a lender can actually look at your pro forma statement and say, you know what, this business deserves $100,000, $200,000 in loans. So this is important. Hack number 4, legitimacy. Yeah, boss, you heard that right. I want you to come out there and get legit. If you want to get a no income proof business loan, you better be legit. I don't care if you can't prove the revenue, okay, but you need to comply with the laws in the industry you're in. That's where it's at. That's where success is at. That's where a favorable loan decision is at. So when we talk about getting legit, we're speaking about a few things, a few simple things. Your EIN, you need to get your EIN, okay? I'm not saying that you can't get approved for a loan as a sole proprietorship, because as a sole proprietorship you can still get an EIN, but it's just better to have a separate legal entity. You want to divorce your personal affairs from your business's affairs. That divorce is really important. So get your EIN, your employer identification number. This is like your company's social security number. You get this from the IRS. You got to think about your licenses and permits. The industry you're in right now, what are the licenses and permits that are applicable to that industry? And do you have a certificate of good standing? This is important also, because again, we are talking about making sure that you run a legit business, a legit operation. Okay. What about articles of incorporation and organization? Do you have those? You need to have those. Depending on the legal structure that you have, an LLC, an LP, C Corp, S Corp, and whatnot. So it will depend upon the legal structure that you choose. And you don't have it. See, if everything I'm telling you sounds like a foreign language, all you have to do is hire someone to take care of that for you. Okay? There are LLC formation services. There are company formation services that actually do all these things. You don't have to have experience in the matter. Okay, it's important. And one thing you need to also understand is that you might need to show your business bank statements. If you can't prove your income, that's fine, but the lender might want to look at your business bank account. First of all, you need to have a business bank account, because if you cannot prove your income, you don't have your business bank account, you don't have nothing, you will not going to get a loan. Okay, at some point you need to actually have some veneer of legitimacy. It's important to have that. So you want to have a business bank account at least, or a business savings account for that matter, so that they can actually track your numbers down to your business bank account and see that, okay, he can't prove the income, she can't prove the revenue, but at least we have traces of cash flows here. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Story Kiwi Show. I'm still talking to you about no income proof business loan, and I'm talking to you about 5 hacks that you need to implement today to actually get approved. And when we talk about legitimacy, the first part is getting legit in terms of your compliance with the law. The second part is your business plan. This is really important. And the thing is that your business plan is actually it actually epitomizes your past, your present, and your future. In other words, you're able to explain to the lender where your business has been, where it is at right now, and where you intend to bring it in the next 5 years, in the next 2 years, in the next 1 year. I mean, really, it's important to have a prospective analysis. Okay, so those are important. And business plans are quintessential because they provide insight as to what resources you need to reach your goals. They establish a clear timeline of when your company can expect to achieve goals. Right? You're able to better determine the steps that you need to take to expand into a new market. You are able to offer a clear way to yourself, to your operations, to your personnel, but also to the lender, so you can track progress as your company grows. You can enable business owners, you and others, to predict and plan for potential risks. Okay, so bottom line is you want people to see the viability of the business. Okay, and when we talk about business plan, we are talking about 10 essential components of a business plan. And again, you don't have to write this business plan yourself. You can hire someone to do it for you. And I actually recommend that you hire someone to do it for you. You can use DIY software to write your own business plan if you want that, or you can hire someone locally, or you can go online to some gig websites such as Fiverr or freelancer.com or TopTal or Upwork. The list goes on, and hire someone to write you a solid business plan. I really, really, really emphasize that. If you have no income, you better have a solid business plan. So here are the essential components of a business plan. You have the executive summary, the business description, the market analysis and strategy. You have the marketing and sales plan. This is important so that you are actually anticipating your marketing and sales plan. You have competitive analysis, management and organization description, products and services description. Okay. You have the operating plan, financial projection and needs, and you have exhibits and appendices. So again, the list here is important, and you want to also have your financial statements are really important. You want to include that. I was talking to you earlier about sales projections. You need to include that in your business plan. And hack number 5, we are talking about asset-based loans. So the thing is, you want to collateralize the loan if needed. Why do you want to do that? Because you want to improve your chances of being approved. That's what it is. If you can't prove income, but you're able to convince the lender to give you an asset-based loan, this is really great. And the thing is, if you collateralize the loan, you are basically helping the lender make a faster decision. Why? Because they actually know that they can actually repo the assets if you do not perform. So from a risk management perspective, this is a great win for them anyway, for the lender. Okay. So what are some types of asset-based loans? So we have you can actually collateralized loans based on your accounts receivable. So we have talked about invoice financing. We have talked about invoice factoring. We have talked about merchant cash advances in case you have electronic sales. So you can actually collateralize your credit card and debit card sales. You can get that, and you can get a loan through those that assets. You can also collateralize your inventory. Yeah, if you operate, let's say, if you operate a manufacturing, wholesale, or retail business, chances are you have a stockpile of inventory. So in this case, inventory can serve as collateral for asset-based lending. Okay, so an asset-based lender will appraise your inventory, the one that you have, in order to, let's say, to determine its resale value, and that value can be used to secure your loan, regardless of your income. Okay, you can use machinery or equipment, for example. So when I'm talking about machinery or equipment, I'm talking about vehicles, commercial kitchen appliances, computer systems. Almost any machinery or equipment that your business owns can be eligible collateral for an asset-based loan. Okay, and this can be, for instance, an equipment loan or a business auto loan. Okay, and you can also consider real estate. Yeah, in certain cases, any real estate that your business holds, like owned retail or manufacturing space, land owned by a development company, or other real estate property, can be considered a fixed asset eligible for asset-based lending. Okay, so the bottom line is that when we talk about asset-based lending, regardless of your income, those loans are easier to qualify for. Okay, they are great for covering working capital and cash flow needs, and less personal risk is required. And if you really think about it, this is a flexible financing solution overall for both parties, for you, the borrower, and also for the lender. All right, folks, this is it for today's conversation. I was talking to you about no income business loan, and we are going to, I showed you 5 hacks that get you a giant loan amount quickly and easily. So you got to think about eligibility, think about liquidity, think about statements, think about legitimacy, and think about asset-based. I will speak to you another time, but until then, remember, stay marvelous.